welcome back to the channel. So next week we have a couple of conferences, as you can see right here. So it's not going to be an easy week. So I think it's very important that you take the time to watch this video till the end. Now we just came out of a good trading week, generated about 154 pips in profit, and we have $2 franc shorts that are still running. Now this week has been a profitable week. Doesn't always happen like that, but it's important that we stick to the plan week in and week out, and then we're able to make money in the long term. Okay, that's how the money is made, not by chasing after quick gains or trying to double your money in a single week. So I hope you made some money. Now what I'll be doing is I'll be looking at the currency pairs. I'll keep this video short. I want to show you the biases and the key levels so that you can find the highest probability trade setups next week. Now I'm going to go through the Forex Factory Economic Calendar analysis first, which is what I always do. Now earlier on I mentioned that we have a couple of conferences. We have the CAD statement right here. We have CAD press conference BOC, BOJ right here. We have Euro conference as well, ECB, and then you have the policy statement. So next week is probably going to be a very difficult week to trade. Don't expect the market to trend one direction. Expect the market to be very whippy. Without a confirmation, you shouldn't be trading aggressively. Okay, this week we were a bit more aggressive, but next week we probably want to scale back a bit because we have conferences. Now I always mention that conferences like this kind of events are where big institutional players do not trade beforehand because they do not know what's going to be said during the conference. Okay, I've said this multiple times. If you're new to this channel, do make sure you subscribe and watch the other videos as well, because there's a lot of nuggets of wisdom that I've provided in this channel. I've been trading for almost 20 years now, so these are experience that I'm trying to impart to you, and I hope that you take it seriously. I hope that you bear that in mind, and more importantly, I hope that you actually pay attention to the market and see that what I share is actually true. It's not just theory, but you can see that during weeks like that, the market usually doesn't go anywhere. As always, I'll be using the 3-day trading guide right here, and I'll be using the MP trading strategy to analyze the market. So if you have not gotten that, please do go grab it. It's in the description down below, totally free, no credit card required. Please go download it. At the same time, please drop me a thumbs up if you appreciate the work that I'm doing. I'm working on a weekend just to help you prepare for the trading week. Okay, do subscribe also if you're new. So let's look at DXY. DXY has no change. The bias is still bullish because we are still in a series of higher highs and higher lows. You can see that there is a high here. There's a low, and then there's a higher high, and there's a higher low. So still no change in analysis because this trend line is somewhat still not broken. It's not very clear if it's broken, but more importantly, this low right here is also not very clear it's broken. So earlier on, or rather previously, I mentioned that this is a very important level. What I want to see is that price goes below it, trigger the stop losses before going up. So right now, what we need to confirm this movement is that we need price to close above this high right here. Once price close above this high, then that confirms that this entire movement here is a fake out, and then price is likely to appreciate higher. Now if this level holds, then of course the recent high will be the resistance. So expect dollar to strengthen only if we see price close above this level here. Now moving on to euro dollar. Euro dollar, the bias is now mixed. Previously it was bearish, but now it's mixed because we have price breaking above this trend line. And more importantly, if you look at this pattern right over here, you can see that this is the left shoulder, this is the head, and this is the right shoulder. So this is an inverted head and shoulders pattern. However, price right now is at resistance. Okay, just look back historically over here. You can see that price is hovering around resistance. So for this reason, I do think that euro dollar is mixed right now. It's not very clear, so it's better that you avoid it. But if you really want to trade euro dollar, then my advice would be to wait for price to close above the entire zone of resistance first. Wait for a retracement back down, look for a candlestick pattern, and then you can go long. Okay, again, this is just following the MPE trading strategy. There's nothing magical. M stands for market condition, which will be bullish if price can close above this entire zone of resistance. Price level I've given you is this entire zone. The last thing that you need is an entry trigger. Okay, it could be a candlestick pattern like a hammer, it could be an engulfing pattern. All these are covered in a 3-day trading guide. Now moving on to pound dollar still no change. The bias is still mixed. The only change that I did is I changed the trend line, I alter it slightly. Previously, I believe I drew it like this, something like this, okay? Now, seeing that price is resisted here, I just adjust it something like this to make it more accurate. Now, price is being resisted here, and potentially price could be supported here because you can see that previously there was resistance here, and then there was support here, and of course over here you have support as well. Now, this is also a ascending trend line, so chances are price is going to struggle over here. So you can see that the range is rather tight. You have resistance here and you have support here. So it's a very tight range. I don't recommend that you trade pound dollar. I recommend that you be patient, and we have conference happening next week. So it's very likely that price will just go up, down, up, down, up, down within this two support and resistance level. Okay, so just be patient for all this. Now moving on to dollar franc bias is now bearish because previously we have the head and shoulders pattern. We have the left shoulder here, the head, and then the right shoulder, and of course this entire zone is the neckline. You can see that price broke it. So right now what we want to see is we just want to see a retracement towards this level, which is the neckline, which has confluence together with this descending trend line. Now, if you look back historically, you can see that this neckline is a very significant level. It was resistance here, it was resistance here, resistance here, and resistance here. So this level right here is a very strong level. Right now, price is in the middle of nowhere. It's right here. Here's your support, here's your resistance. So if price is in the middle of nowhere, then please don't chase the market. Okay, just be patient, wait for price to retrace higher, look for candlestick pattern, and then you can short it down. Now this is support because previously this was the inverted head and shoulders pattern. This is the right shoulder, left shoulder, head, right shoulder. Okay, bearish bias for this one. Now moving on to Aussie dollar. Aussie dollar bias is bullish because we have a series of higher highs and higher lows. If you draw this as a high and this is a low, then this is a higher high. If you were to look at this sub waves or sub movement up, you have a high here, low, and higher high here and higher low. So it's bullish. However, right now price seems a bit tricky. Previously there was a high here, and I think what the market did was it just pump it up and try to trap the buyers. So I do think that price will do a deeper retracement just to trigger the stop losses of people who went long here, people who bought the breakout of the high thinking that price will just go one direction towards the next resistance level. So the market always likes to do things like this. It likes to sell down, trigger the stop losses first before going up. So I'll be looking at this demand zone here because this is a rally, basing pattern, and rally. So this is a strong level. I'll be looking at this level to go long. Moving on to dollar CAD. Dollar CAD, no change. Same analysis as what I shared last week. Bias is still bearish because you have a high here, low, lower high, and lower low. This supply zone is still valid. Price hasn't retraced to it. Now, I like this supply zone a lot because previously there's a swing high over here. If you go to the H4 chart, you can see that there's a swing high here. So chances are that going to be a lot of people who shorted here and put their stop loss above. So same thing as always. What the market likes to do is it likes to trigger the stop loss. So there is a chance that price might go higher first, trigger the stop losses, and hit this supply zone before selling down. So be very patient. You want to sell, but you want to sell at the correct level, which will be at this level here, 1.24386. Okay, just be patient. Now moving on to Kiwi dollar. Kiwi dollar, same thing as Aussie dollar because most of the time they move in the same direction. Bias is still bullish because you have a series of higher highs and higher lows. This is the high, this is the low, and of course this is the higher high. Same thing. This was the previous high, and right now price seems like it wants to go back down because a lot of people who chase the market are going to have their stop loss just below here, and they're going to get triggered with a loss. Okay, so same thing as Aussie dollar, do expect price to do a deeper retracement into this level, which is a demand zone. This is a rally, base rally. So just watch out for this zone. If you look back historically, this is also a good level. This was resistance, this was support, this was resistance, and this was resistance. Okay, so this is a very strong level. Watch out for that level. Now moving on to dollar yen. Dollar yen is a bit high. Previously, I did warn about this level here. So true enough, this week price was resisted at this level. Okay, you can see that right now price seems like it wants to come down lower. Now after this entire big movement up over here, I do expect that price will do a deeper retracement, not a shallow one. So I don't expect that price will just start coming down and retracing just to this level, I do expect price to do a deeper retracement level back into this important support level which I talked about previously. So do be patient. Please do not go counter trend if you're still struggling. I know it's very tempting to go counter trend short because you say, hey, look, right now price is here, there's some distance to here. But remember, the easy money is always made following the trend. The bias is bullish. You have a high here, you have a low, you have a higher high. So please do not go short just trying to make some short-term profits because it requires more experience. If you're still struggling, there's no reason why you should be going counter trend. Gold is a bit tricky. Look at this candle right here on Friday. I don't like this movement. This is like a big shooting star, and the structure is still bullish, however, because we have an inverted head and shoulders pattern here. This is the left shoulder, this is the head, and this is the right shoulder. And if you were to look at this movement up, you have the high here, low, higher high, higher low. So it's still bullish. However, with this kind of price action, what could potentially happen is price could sell down first because this is a swing low. So same thing as always, a lot of times people are going to place their stop loss here and here and here. So what the market likes to do is it likes to trip the stop loss, retrace lower first and then go up. So that's how I would trade it. I would try to catch a trade at the right shoulder again over here, banking on the fact that a lot of traders are going to have their stop losses here. Okay, so please do not chase the market. Right now, price is very close to resistance, which is this swing high over here. And let's say price were to go higher, this level is also very important. I talked about this level multiple times. This is a supply zone. So when price comes here, please take some profit off the table. Don't expect price to just rally all the way up. Now moving on to Euro Pound. Euro Pound, no change, same thing as last week. Bias is still bearish because we have a high here, we have a low, lower high, and lower low. Now, this entire week has been just a consolidation week. So price on Friday pumped up into resistance. So the last thing that we need is we need a entry trigger, right? Because we have the trend with us, bearish bias. We have the price level, which is this previous support and support here. The last thing that we need is a price action candlestick pattern, which we haven't gotten. So just be patient, wait for price to show some form of bearishness here, and then you can take a shot down. Now, I previously talked about this level here. If price is resisted here, then there's a lot of space between here to here. Okay, it's not difficult to get this level. Just look back historically, and you can see that this was support. Nasdaq 100 bias is still bullish. We have a double bottom pattern here, which I spoke about last week. So this was the first bottom, this was the second bottom. Even if you don't see this as a double bottom, you see this as a low, high, this will be a higher low, and then this will be a higher high. So the bias is still bullish. However, price is very close to resistance now, or rather is at resistance. You can see that, let me just zoom in. You can see that this was resistance, this was support. So this right now is being resisted. So do expect price to do a deeper retracement back into the neckline over here. Look for a candlestick pattern and then you can go long. Okay, you just have to be more patient for the step. Moving on to pound yen, the last currency pair. Pound yen has been trending up a lot. You can see this entire movement up. So I think it's time for some retracement down. You look at this movement right here, this is pretty bearish, this candle and this candle. This is actually an evening star pattern. So I do expect price to do a deeper retracement towards this demand zone. So same thing, this is a rally base rally. So this is a demand zone. I expect price to be supported here. If you just look back historically, you can see that this level is actually some form of market structure level. So this was a high, this was a low, and this was a high. So this entire zone in essence is a strong support and resistance zone. So just be patient. Don't be in a hurry to chase the market and buy here. I know that this looks like a support, potential support, but remember the market doesn't like to do things which are very obvious. It likes to trigger stop losses. So what it might do is that it might bounce off here a bit, something like this. Let me just draw it properly. It might bounce off a bit and then it traps traders who want to go long, and then they buy, and then it just goes up a bit, and then after that it starts selling down, and then it triggers the stop losses. Okay, this is what could potentially happen. So please do not just buy off this level. I do think that this level is a stronger level to go long. So that's all I have for you in this video. I'll try to keep it short. Now, if you have any other currency pairs or cryptocurrencies that you'd like me to analyze, please let me know in the comment section down below. Do drop me a thumbs up if you appreciate it. If you have not gotten your free day trading guide, go grab it. Link is in the description and pinned comment down below. Do join us on Telegram channel if you have not already done so. If not, thanks for watching. Appreciate your time. I'll catch you in the Telegram channel.